So the Dow just hit 40,000 for the first time ever in history. Biden Harris HQ posting that out. The White House also put out a statement about this. Big deal. Stock market is making all-time highs. Now, to be fair, when the stock market was making all-time highs under Trump, all of the Trump people were saying, see, look how good Trump is for the economy. Look how great Trump's policies are working. The stock market is pumping. He's obviously the best president for the stock market. Trump also came out there and said that if Biden got elected, the market was going to crash and that it was never going to recover and it was going to be the end of the world. And now here we are crossing new highs for the market. Under Joe Biden, Dow crosses 40,000. Market sets record highs. Quote, toughest news yet for the one guy in America rooting for the economy to crash because he thinks it'll help him politically. Donald Trump promised the stock market would crash if Joe Biden was elected. Instead, Joe Biden has broken economic records across the board, from record small business growth to historically low unemployment, and now a new high for the Dow, strengthening Americans' retirement plans. They're focusing a lot on the Dow because it has that 40,000 number, and the Dow is something that most people are familiar with. That's not really what people involved in the stock market follow. They follow the S&P 500 and the NASDAQ. They hardly ever talk about the Dow because it's like transportation, industrial stocks, things that are boring. But like older people, they're used to hearing about the Dow. And so that's why they're focusing so much and talking about how it just crossed 40,000. Now, the S&P 500 and the NASDAQ also cross record highs, but it doesn't have that 40,000 number, which is the highest number they could post for you right now. Quote, now the choice is clear. Either President Biden continues to deliver an economy that works for working families, or we give the keys back to Donald Trump, who tanked the economy and left a mess for President Biden to clean up and get America back on track. If Trump returns to power, he will tilt our economy to benefit the super wealthy, cut Social Security and Medicare, and leave working families behind, just like he did before he lost to Joe Biden. Well, he didn't do all those things. He didn't cut Social Security and Medicare before he turned it over to Joe Biden or anything like that. So, not all of those things qualify, but clearly President Biden, the White House staff, they're trying to play up this record high stock market as proof that Biden is doing a great job on the economy. Now, when people were talking about how Trump was getting the market to all-time highs, what you saw people on the left posting was that the stock market is not the economy. The stock market is not the economy. This is just these big, super wealthy corporations. It doesn't say anything about life on the ground for real, average, everyday people. And that's actually the truth. It doesn't say anything about the economy as a whole. I'm going to give you a couple of reasons on why. It does say something for people who have retirements, and especially for people who are close to retirement. It would be important for the market to be at all-time highs. Like, that is a good thing. It's a good thing for people in the economy. It's not exactly a measurement of the economy as a whole, though. I wanted to show you a couple things, and we went over a couple of these yesterday. But I kind of figured I would spend a little bit more time on them today. Right now, first off, this episode is going to be very important for you to watch the video on the episode. I have a lot of charts and graphs and things like that, and I apologize that we're going to talk about something really boring like the economy, the number one thing that matters to the most amount of people in the country, and like the most important thing in the history of humanity, all throughout human civilization. We're going to talk about economics right now, and not so much about immigration and special counsel reports and stuff like that. We'll just talk about the economy right now. So I have the consumer price index, and I have how much it's gone up under each president. And we'll focus more on Trump and Biden because that's the election that we have. It's not the election that we want, but it's the election that we have right now. It went up 7% under Trump, and it's gone up, I rounded it to 19% under Biden. Right now, it's like 19.87%. And I was nice, and I put 19 because I didn't want to put 20. Okay. 7% for Trump, 19% for Biden. So remember, we were talking about the stock market and whether or not that is a measurement of the economy. What is actually important about the stock market getting to all-time highs? It's important for people that have their money invested in the stock market, not just for the people who do that for a living. It's important for them, but it's important for a lot of Americans, millions and millions of them, whose retirements are tied up in the stock market. And so when you look at stock market gains, what you want to see is, well, the amount of money that I have in the market in my retirement portfolio, it went up by X amount. And that is really good for me because now I'm going to retire and I'm going to have this much more money than what I put in, or this much more money than what I had a year or 2 or 3 or 4 years ago. And that's going to make life a lot better for me. Why is that going to make life a lot better? Why is that important? Because you're going to take that money out and you're going to live on that money. And so that means the value in the stock market and the amount that your portfolio goes up, that's really important to you because you're going to take that money and you're going to use it to pay for your expenses for the rest of your life. That's the idea. That's the plan. Therefore, I find it really important to take inflation into consideration when you're talking about how much the stock market grew or how much your retirement portfolio grew. Did it actually outpace inflation? It is outpacing inflation. We do know that. Okay, but let me show you some of the differences here. If you don't take inflation into account, once again, I apologize. This is going to be so boring. Who cares? It's just the economy. It's just the livelihoods of millions of people. Okay, I get it. I get the thing, but this is important to me. You don't have to be here, and I want to talk about this. If you look at the S&P 500 and you don't take any inflation into account or anything, you see that it grew 63% while Trump was in office, a full 4 years. It grew 63% while he was in office. All right. And then you can look and you can see that it's grown 41% so far while Biden is in office. And that's pretty good. He's still got several months left to go. A lot of Trump's gains happened at the very end of his term, after the pandemic lows and all of the new money that we printed got flooded into the stock market and all those companies became exponentially more valuable. And so his 63% for Trump in a full 4 years and 41% for Biden. But it's comparable, especially when you take the pandemic into account, right? Not too bad there for Biden. I mean, heck, Bush, it was negative 39% over 8 years. Obama and Clinton, they had some great 8-year terms. Obama taking over after the housing market crash under Bush, he had 175% gain. And Clinton, having the privilege of being the president while the internet was came into existence or into prominence. So he had over 200% gains for the S&P 500. Now, that doesn't mean that's how much your portfolio grew unless you only owned the S&P 500, which no one would recommend, even though historically it would be really great. There's like no time throughout history that would have been a bad idea, but whatever, no one would recommend that. When you take inflation into account, because remember, the importance here is that you're going to take this money that you've gained in your 401k or your IRA or whatever it is that you have your money in. You're going to take it out and you're going to use it in the economy. All right. When you take inflation into account, the S&P 500 grew 51% under Trump, and it's grown 17% under Biden in a little less than 4 years. That's because we've had a whole heck of a lot of inflation during the time that Biden has been president. Now their two numbers don't look very comparable anymore. Now it looks like actually for people who were 4 years away from retiring, I guess, when Trump came into office, they actually did way better throughout Trump's tenure than people who were 4 years away from retiring when Biden came into office. They still grew and they still outpaced inflation. These numbers take inflation into account. The official CPI inflation numbers, we know all about the fact that they're not real, but we're going to use the official numbers that we have to deal with. They're talking about all-time highs right now for the Dow Jones, the NASDAQ, the S&P 500. Of course, this means Biden's doing a great job with the economy, but what happens when you take inflation into account? Without inflation, you'd see that the Dow Jones is 10% above its previous all-time high right now. Okay, that's pretty good. Inflation taken into account, the Dow Jones is a little more than 2% below its previous all-time high. From looking like it's 10% above the previous to now it's actually still 2% below the previous. Now, maybe I'm just doing all this because this is statistics and numbers, and you can literally use any amount of numbers to construct whatever narrative it is that you want. And sure, maybe that's some of the motivation for why we're talking about this right now. Oh, you just want to try and make Biden look bad and Trump look good. I have no intention of making Trump look good whatsoever. I would like to make Biden look bad, though, but I do think that these numbers are still important. Remember, what's the important thing about these stock market indices going up? It's people's retirements. It is invested because they want to make more money so they can then retire and they can use that money in the economy to buy the things that they want and they need until they die and until it's over. And so it is important to take inflation into account because the cost of all the goods and services has gone up by almost 20% in the last 3 years, little more than 3 years now. So I do think it's important to add inflation into the equation. So the Dow is actually not past its all-time high when you take inflation into account. The S&P 500, you'd look at a chart and you'd say it's 11.5% above its previous all-time high. But actually, when you take inflation into account, you'd see it's almost 1% below its previous all-time high. So while you look at the number and it looks like, oh, wow, it's 11.5% above that previous all-time high. Look how much growth we've had over this time. Actually, when you see the devaluation of your money, the money that you would take out if you were to sell right now, you're still below that previous all-time high. The only one that isn't still below the previous all-time high is the NASDAQ. Before inflation, the NASDAQ would be up 14%. After inflation, the NASDAQ would actually be up 1.5%. So still up above that previous all-time high. Good job. If you were just invested in the NASDAQ, then you did okay. You're still up above that all-time high. Now, on the idea of whether or not this is a good measure of the economy, I guess it depends on who you ask and whether or not their guy is in office. Because clearly, when Trump was in office, people on the right would say, of course, this is a great measure of the economy. Look, this is awesome. Now, I think it was a little bit closer at that time because the whole time Trump was in office, we only had 7% cumulative inflation throughout that entire time. And the market went up 63% during that time. So I think it's a little bit closer. But it's still not a good measure of the inflation because when you're talking about the Dow or the NASDAQ or the S&P, those are actually just averages of a certain amount of companies. Like the NASDAQ has 100 companies in it. The S&P 500 has 500 companies in it. So you might think, well, it's just a measure of 100 companies or it's a measure of 500 companies. It's actually not even that because the weighting is different for each. By the weight, I mean, what percentage of the money is doled out to each one of these companies? Let's say you're going to invest $1,000 and you were going to invest in all of the S&P 500 stocks. You might think, well, I'm going to divide that $1,000 by the 500 stocks, and I'm going to put the same amount of money into each stock, therefore I'm equal weighted into each one of these stocks. That's not the way that these averages are actually weighted. For instance, the S&P 500, 30% of it, 30% of the S&P 500 is just 10 stocks. Of 500, there are 500 in the actual S&P 500, okay? 30% of the weighting, 30% of the money is between 10 stocks, okay? The NASDAQ is even worse. All right. Well, first, let me tell you about this real quick. Yeah, S&P 500. When you look at the S&P 500 equal weighted, you know, the the S&P 500 just tells you whatever that number is with the weightings that they have for each one of the stocks. I'm sorry, I know this is boring. I get it. Eyes are glazing over. It's just the economy and the livelihood of society, and everyone that you know and love and hate all at the same time. I get it. It's not fun. Why don't we just talk about immigration and make fun of Joe Biden? We're not going to do that right now. If you take an equal weighted index, the S&P 500, meaning each stock gets equal weight in the amount of money that you would put into it, it's actually still 8% below its previous all-time high. Meaning that the weighting, only 10 companies getting 30% of the money that goes into it, and the other 490 companies fighting for the other 70% of the money. If those 10 companies do really, really well, the S&P 500 looks a whole lot better than what it actually is. I mean, it's good, but is it a good measurement of the economy as a whole? 10 stocks out of the 490 that are even in that index. The NASDAQ is even crazier. 50% of the NASDAQ is focused on only the top 10 companies. One of those, NVIDIA, which has a 6% weighting just by itself, is up over 300% in just the last year. Why is that important? That helps drag up the entire thing. So when you actually go look at the equal weighted NASDAQ, it is also 8% below its previous all-time highs. The reason we're talking about this is the question of, is this a good measure of the economy? Is this actually telling us that these companies are doing better than ever? It's telling you that some companies are doing better than ever. It doesn't really tell you a lot about how the American people are doing, because many of these companies are technology companies that make money off of advertising and stuff like that. A lot of these companies don't even make any money, but we won't go into that right now. So is it a good measure of the economy? No, not really. No, it isn't. I would say things like GDP would be the best way to measure how your economy is doing, but even the government is screwing up GDP because money that they borrow and spend gets included in the GDP. So, hey, I'm just telling you what we have to work with right now. To shift topics just a little bit here. Big news. Good Morning Liberty is now able to write community notes. I don't know if any of you guys are approved to write community notes, but this guy is right here. And today I submitted my first community note. And when I submitted that, I felt a tingle go through my arms and then my hands. It was like power just sort of flowing through my veins when this happened. I had the power to change the world with this community note. Now, it's not just automatically going to show on there. Other people that rate community notes have to go on there and rate the note, see whether or not it's helpful and truthful, and whether or not the post itself even needs a community note or whatever. So we'll see. We'll see if this note that I submitted for Elizabeth Warren's post ever actually shows up on there. Someone in the group said, I hope you get paid to do the community notes. Unfortunately, no, but I get paid, and that satisfaction I felt and that feeling that I was going to change the world, you can't put a price tag on that. Unless you tried, I would put a price tag on it for sure. But I'm going to tell myself that you can't put a price on that because it is very important. So this has to do with corporate profits. Elizabeth Warren posted out, corporate profits rose 5 times faster than inflation from 2020 to 2022 and drove over half of inflation for most of 2023. We need to fight back against big corporations' price gouging and deceptive tactics so we can lower costs for American families. I'm in that fight all the way. We've already done an episode, I think another time when Charlie was gone, because that's when it's easy to just deep dive into stuff, I think I talked a lot about the price gouging thing, and I even brought up one of the studies that we're going to be talking about today. But as far as price gouging leading to inflation or corporate profits leading to inflation, there's basically no evidence that shows that that is the case. In fact, I can tell what part of what she's quoting, which is something we've talked about a few times when she says that it drove over half of inflation for most of 2023. She's quoting an article that we've talked about here on the show. The headline is half of recent U.S. inflation due to high corporate profits, report finds. And maybe she's not quoting this direct article. She's quoting from the report, which then went out to tons of news publications parroting the same thing. Half of recent U.S. inflation due to high corporate profits, report finds. So this actual report, we're not going to spend a lot of time on this because this is probably the fourth time we've talked about this specific report that has just been quoted over and over and over again. She says for most of 2023, you can only find, I guess, what she's talking about here, where it says Q2, Q3, 2023. Now, by definition, that's half of 2023. It's literally not most, it's half. It's Q2 and Q3 of 2023. But whatever, that's not what my community note was about. And it said that the profits contribution to price increases was 53%. That is the only time that you see that number being that high, except for when they do Q3 of 2023, which is included in that, in this one right here, where they say it's 83%. They found one quarter where the profits contribution was higher than the other contributions. What are the other things they talk about? They talk about the material costs, non-labor contribution is what we call that, and labor contribution. So your employees, whatever you got to pay them. What they found each one of these times, except for when they singled out one single quarter, Q3 of 2023, all of the other times they found that labor was a higher portion of the contribution, the price increases, than the profits were. Even where it says 53% was a profit contribution, the price increases, labor was 73%. How was that? Because non-labor was minus 27%. There was actually deflation in that section at that time. So labor was still more than the profits contribution, except for this one quarter in 2023, Q3 2023. If you look since 2020, they say profits contribution, the price increases was 30%. The labor contribution, the price increases was 45%. That is still more. Since 2021, profits was 21%, labor was 53%. So every time it says that labor was more than profits. Okay? That's what she's quoting when she says that it contributed to over half of the price increases for most of 2023. That's not the main thing that we're going to talk about, though. You see, in my community note that I submitted, I put several articles in here from the Federal Reserve. So let's get into that. Do I have to apologize for the boring? No, I'm not going to apologize for it being boring anymore. Like, here's one from September of 2023 saying corporate profits in the aftermath of 2019. And what they continuously find was the corporate profits were not outside of the norm, especially for when they were recovering from a pandemic, when they were recovering from any kind of economic shock, a recession, a downturn, anything like that, that they weren't outside the norm. And what this one found was super important was that they were using the word profit does not solve this equation that we're trying to find out, because profit can encompass an awful lot of things. For instance, let's say that the company is charging 5% above cost for something, and then the government also sends them $1 billion. Now, that $1 billion gets counted into their profits for that corporation for that quarter. Sounds ridiculous? That's because it is. It's also what happened quite a bit in the year of our Lord 2020. A lot. To the tune of billions and billions and billions and billions of dollars. Okay? So this Federal Reserve paper specifically tried to account for, well, what about when the government gave people money? Large and direct government intervention to support U.S. small and medium-sized businesses. Large reductions in net interest expenses due to accommodative monetary policy. They say once we adjust for fiscal and monetary interventions, the behavior of profit margins appears much less noticeable. And by the end of 2022, they are essentially back at their pre-pandemic levels. So they account for those things. This is the kind of chart that you would see when you look at corporate profit margins. You see this big spike up that occurs after the COVID pandemic, and people say, oh, profits are at all-time highs. That's why prices are so high right now. I just wanted to point out that a better way of looking at this would be corporate profits before taxes. When you look at corporate profits before taxes, their profit margins are actually still below what they were back in the 50s. But remember, back in the 50s, there were a lot higher taxes. We've lowered our corporate tax rate down to 21%. That helps the profit margin go up by quite a bit. So why don't you just look at what the actual corporate profit margins are before taxes? And that way you don't have to worry about, well, is the government taking more money off the top or less money off the top? And when you look at that, we actually have not crossed over where we were in the middle of the 60s or in the middle of the 50s or even the beginning of the 50s. We're still below those levels right now. It's just a small little tidbit for you from the Bureau of Economic Analysis. Okay. The Fed actually also looks at something called net capital share, which is what all the capital owners, the companies, the debt and the equity holders, so the people who they owe debt to and the company itself, are left with after paying their labor costs and the costs associated to wear and tear on their capital. And what you see is after the pandemic, the actual net capital share is still below where it was, say, back in 2015, 2014, 2013. It dipped down quite a bit, obviously, during the pandemic. That's what the capital owners are left with after paying labor costs and stuff like that. Their profits went down quite a lot. And we still haven't even got back over where we were back in 2014 and 2015, even times as recent as that. So yet again, they provide some analysis and some evidence for the fact that corporate profits are not what's leading to higher prices. They put out a chart like this, which says profit growth for businesses, year-over-year change. Do you see this massive spike anywhere on there that we're dealing with where we had 40-year highs in inflation associated with year-over-year change in profit growth for these companies? No, actually, you see it much higher in the early 2000s. You see it much higher in the mid-70s than where we even got after the COVID pandemic was over. It was actually just in a more normal range, okay? So instead of using the word profit, what the Federal Reserve suggests in several of their papers, and I read the entire thing because I wanted to fully understand what it was that they were talking about, and I think I understand it to the best of my ability. Instead of talking about profits, because that can include things like government subsidies, that can include things like the government doing things such as artificially lowering the interest rates for companies, things like that. What they suggest people should be looking at is something called markups. And isn't that what we are actually trying to figure out? When Elizabeth Warren is talking about, well, it's actually price gouging that's causing all of this inflation, doesn't she mean the amount that companies are charging above what it costs them to actually produce or get that product? That's what that cost is for this product. How much are they charging above that? That is their markup on that product. That shows what the company's pricing power is. How much of a markup can they actually do? All the other things when you're talking about profit, those aren't what we're really talking about here. What we're talking about is pricing power. How much can companies raise their prices? Now, when you flood the market with like $5 trillion extra dollars and you give it out to people, a lot of it goes to the corporations, which gets counted in their profits, by the way. A lot of it goes to people, and then they're more willing to spend more money on goods and services because they're flush with cash. Okay. I think the actual markup that the companies are charging is the important part. This is a new paper that came out of the Fed 2 days ago. So so the reason we're talking about this is because CNN actually posted an article and referenced this paper saying that corporate profits are not what is driving inflation. CNN posted that. I didn't see the post from them. I saw someone comment on Elizabeth Warren's post saying that they were mad that CNN had said something earlier that morning about it not being corporate profits. And then I found the article. And then I found a link to this paper from the Federal Reserve where they talk about how you should talk about markups instead of profit, because that is what people like Elizabeth Warren or Bernie Sanders or whoever, Robert Reich, that's what they're actually talking about. Don't feel bad for me. I did it by choice. It was a lot of reading though. I mean, they were long documents, but I really didn't want to miss everything or anything that was in any of them. But I find this stuff really interesting, so it was okay, and picked up a little bit more knowledge, I guess, along the way. They find that for most industries, their markups did not go up above what inflation actually was. And in fact, their markups were below what the core PCE inflation was, except for petroleum, oil, gas, things like that, and motor vehicles, which is just sporadic all over the place. Just every which way. Can't figure out what it's doing whatsoever. The other stuff, general merchandise, services, things like that, that's actually been below the inflation number. Now that's the markups that they're charging over what their costs are. So when they take what's called an aggregate, where they bring all of these different industries together and they weight them in the way that the CPI is weighted, and they put them together and they say, here is how much companies marked up their costs. Here's how much that changed. The cumulative change of the markup and the prices is actually flat up into 2023. If you're watching the video, which I strongly suggest you do, you see the core PCE price index, cumulative change being up to 12, 13%. And you see the markup for this industry aggregate actually sitting right around 0%. And it actually didn't change. Okay. That's an important fact. They say using industry level data, we show that markups did rise substantially in a few important sectors, such as motor vehicles and petroleum products. However, the aggregate, which is the combination of all of them, which is the more relevant measure for overall inflation, has stayed essentially flat since the start of the recovery. As such, rising markups have not been a main driver of the recent surge and subsequent decline in inflation during the current recovery. I found another paper that I found to be cool, which was referenced in this paper, which was referenced in another paper, and I read through. It sounds like a lot, but I read 4 papers. That was the amount that I read. What they found with the markups increasing at the beginning of the recovery was that industries were trying to account for expected future increases in costs. They had just came from a time where no one was buying anything, and they expected that costs were going to go up a lot, and therefore they did what we would say they made hay while the sun was shining. So they did raise their markups a little faster at the beginning of the recovery to try and account for their expected future costs going up. And then that was it. They were done. And then they've actually lowered the amount of those markups since that time. And so they're saying that this is not causing any of the inflation whatsoever. That's all I have to talk about really today. Why is all of this important? Because people like Elizabeth Warren, who were literally suggesting laws, and a lot of people suggested laws to tax windfall gains, windfall profits, things like that. When they get to come out and they try to blame the corporations for the inflation that we have right now, they're taking the blame off of where it really belongs. It really belongs with, yes, the Federal Reserve, the people who actually print the money and send it out into the system. I actually don't personally blame the Federal Reserve. I blame the government because the Federal Reserve was just reacting to the government's policies. The Federal Reserve was reacting to the position that the government put them in. And so they flooded the market with all of this money and, printed $4 or $6 trillion, something like that. Now, of course, if they weren't there to do it, would the government do the things that they did? Chicken or egg scenario right there. Maybe if the Fed wasn't there to print all that money, the government would know that they couldn't do the things that they did during the pandemic. Let's say that they share the blame, okay? But the corporations who have raised their prices to try and account for the fact that they expected their prices on their goods to go up, you can't really blame them for this. Have there been people that needlessly raise their prices just so they can make more money and they don't actually have to raise their prices? Of course. Of course. A lot of businesses, I'm sure. But the question is, how were they able to do that? They were able to do that because of all of the artificial buying power that was put out there in the economy. That is how they can actually do these things. All these corporations are actually charging the most amount that they can for their goods and services. They always have been. They were doing it in the 50s and the 70s, and they're doing it right now. They're all trying to get the most amount of money that they can. The thing that changed was the amount of buying power that people have. That is what actually determines what their pricing power is for their companies. How much buying power do the people have? They can't raise their prices above the limit that people can pay. Maybe some people can pay, sure. But they can't just go, I'm going to charge $1 million for a gallon of gasoline. There, I'm going to make so much money. No, you're not. You're not going to make any money. So there's an auction going on. And what happened was people were given a bunch of funny money, a bunch of artificial buying power during the pandemic, after the pandemic, just sent money directly into their bank accounts, and they had more money to spend. They got paid to not work. In some cases, people got paid more to not work than they were getting paid when they were working. And then on top of that, a bunch of the corporations got billions of dollars too, and they got bailed out. And then, by the way, all of that money had to be either printed or borrowed or taxed away from you. And the whole time, people are acting like it's just going to be for free. It's not for free. We're paying for it right now, and we're going to continue paying for it. And when they just turn around and say, well, it's only the corporations to blame, it's not the fact that the government's shut down the economy. It's not the fact that we printed all this money, not the fact that we doled out all of this money or that we gave people these massive unemployment benefits during the pandemic. It's none of that stuff. It's just corporate greed. They're trying to shift the focus away from what the actual problem is, which is them. So that's why these things are important. And you see, the big issue that I have here is that we have, all of us, is that it probably took Elizabeth Warren like 30 seconds to write that tweet. And boy, isn't that easy. Just say, well, look, corporate profits, they increased faster than what actual inflation was. Now, that statistic, by the way, comes from an analysis of like the 100 biggest companies out of, the millions of companies that there are out there, or the 12,000 at least publicly traded companies that there are out there. They took the 100 biggest companies that there are, looked at their profit margins, and then they quote that as fact. Corporate profits rose 5 times faster than inflation. And people want to believe that. It's super easy. All you got to do is stop them from doing that, and then that solves all the world's problems. It's so much easier for people to just say that. It took her 30 seconds to do it. It took me 40 minutes to briefly, barely cover some of the things that I went through painstakingly in 4 different Federal Reserve studies, that I hardly talked about any of the things that I read in these studies, just to try and do an overview of what the actual problem is, and to try and disprove a tweet that it took Elizabeth Warren 30 seconds to write. That's a big problem that we're running into right now. The people who didn't go all the way to the end of this episode because it's boring as hell. That's the problem that we're running into right now. It's so much easier just to say a thing, and people want to believe it. It's so much easier than reading all of these studies from the Federal Reserve. If you enjoyed today's episode, share it with a friend, share it with a family member, Share it with the children that know economics. Do all of those things, okay? We got Dumb Bleep of the Week tomorrow. Make sure the live group, joingml.com, Fed Haters Club. Make sure that you guys get your submissions in for Dumb Bleep of the Week. I haven't sent many over personally myself this week because I've been talking about so many things this week. I haven't been sending over as many things in the Dumb Bleep of the Week. So you guys, you got to help me fill the gap for sure this week for Dumb Bleep of the Week. If you guys enjoyed today's episode, leave a rating, a review, smash, subscribe, follow, all of those things. If you do all of it, we'll be back again tomorrow. Same Liberty time, which is whenever the heck I want. Same Liberty channel, which is Good Morning Liberty. Until then, have a good day and a good morning, Liberty.